Okay, guys, so in this lecture, we are going to talk about a very important topic which we need to understand, and that is why price moves. Okay, so on the chart, okay, this is the chart. On the chart, we are having this price movement, means price is going up, sometimes down, sometimes sideways, means it's moving in a manner that we are not able to decide in which direction this price is moving. We are looking at this red and green candles. Okay, what this candle shows us, that price is moving. Some days it is moving in the positive direction, means we are having a green color of candle. Some days it is moving in the negative direction. It means we are having a red candle. Some days it's not moving at all. Means whatever movement it does, at the end of the day, it ends from where it started. So at such days, we are going to have a candle which have no sense, a candle of confusion. So I don't want to confuse you anymore. What I want you guys is to understand the actual logic behind price movement. So if we talk about any commodity in the market, for example, if we talk about gold, if we talk about any particular product available in the market, whatever it is, the simple reason behind the price movement of anything is supply and demand. Okay, remember these two words because these two words are going to help you identify the levels where these sharks, big players, institutions are leaving their marks, and we have to catch those places right over the chart. So the simple logic behind price movement is imbalance between demand and supply. Okay, now let's understand this in detail. So here we are having two situations on the chart. Situation number one is the balanced situation. What it is, we will understand that. And the second number of situation is imbalanced. So in imbalanced, we are having two options. First is demand exceeds supply, and the second one is supply exceeds demand. What I am trying to say you is, when number of shares to be bought is equal to the number of shares to be sold, then we are looking at a situation where price will be moving in a balanced condition. Means we are not going to see big movements. But when there is a condition of imbalance, then we are going to see big green candles and big red candles. When we are going to see big candles, let's check it out. Okay. Now focus on this slide. Here I have used two terms. Number one, demand. Number two, supply. Okay. Supply means the availability of something. Demand means people are trying to acquire something, buy something. They are willing to have something in their pocket. So they are looking for it. That's demand. Someone is having something and he wants to sell it in exchange of anything, maybe money, many other services, whatever it is. This is known as supply. So when people who are looking to buy more compared to the people who are looking to sell, the quantity of shares to be bought is more than quantity of shares to be sold, then we are going to have a big green candle. Try to understand. Here we are having 5,000 shares to be bought, but we are only having 1,500 shares to be sold. So in selling side we are having 1,500 shares, and on buying side we are having 1,000 shares. What it says? It says that demand is high than supply. So what will be the result of this equation? The result will be a big green candle. Similarly, if we change the situation, this is the imbalanced situation number 2, where supply is higher than demand. Okay, so if you are having 5,000 shares here which are available to be sold and only 1,500 shares are in the buying side, people are only going to buy 1,500 shares, then what this situation tells you? It clearly says you that people willing to sell, number of shares to be sold, is higher than the number of shares to be bought. It clearly states supply is higher than demand, price will go down, and we will see a big red candle on the chart. Okay, so let's understand all the slides first, then we will understand these things on chart itself. Okay, the most important question is, I told you two situations. First is balanced and the second is imbalanced. In the imbalanced situation, we are looking at big candles, right? But what creates this imbalance? The answer is entry of a shark. What I want to say here is that when a shark enters the market with big orders, let me explain you on the chart. For example, there are 500 retail traders, those who want to sell. 500 retail traders, those who want to sell. Okay, but the total quantity they want to sell means if we add up all the shares these 500 retail traders are trying to sell, is only 1 lakh. All these people are having 1 lakh shares in total. They want to sell it. And now we are having one shark. I hope you guys now know what a shark is. Now we are having one shark here, and this shark is looking to buy 5 lakh shares. Means 500 retail traders are there, but they all are having 1 lakh shares only and they want it to sell. But a shark is there in the market who is liking this particular stock and they want to enter into this stock and they want to enter with 5 lakh shares. 5 lakh shares. So it clearly shows us that that demand is higher than supply. So what we will see? We will see a green candle, a big green candle. Okay, now you can see when a shark enters, it changes the complete equation. Until unless there is no shark in the market will keep moving like this, sideways. As soon as we see the entry of a big shark, price starts moving like this or this. You will start seeing big movements in the market. But until unless they are not present, there will be no big movement in the price. Okay, there is also one more situation where price goes sideways. We will understand that situation where sharks are accumulating or distributing their position. So in those situations as well, price goes sideways, but we will understand that part later on. Right now, what is important for us to understand is that whenever shark enters the market, it brings big movement. The big movement indicates Yes, someone has entered with a lot of money. Okay, so this is the basic reason behind the price movement. I can show you a lot of charts where you will understand ki, yeah, this is how price moves after the entry of a shark. Okay, look at this. Look at this chart. Price was going sideways for a very long period. It was moving in a range. Okay, this is the range it was in. But as soon as a shark entered somewhere here, I will show you how I am saying this कि यहाँ पर एक shark enter हुई है, that a shark entered at this place. I will teach you this thing as well. But as soon as a shark entered here, price broke this range afterwards. It's out now. Now I started making big green candles. Okay, so this 524 was my target. It achieved it. So I am out of this stock. But that's none of your concern as of now. The thing is, key, when price is moving sideways, no big orders are there. But as soon as price starts moving like this, look at this. This is a big movement. Such a big movement. Entry of a shark. Shark is selling. Big movements, big green candles. Shark is buying. Okay, so this is how price looks on a chart when a shark enters. I hope you understand this concept. If not, let me know in the comment section or in the community section. I will try to teach you this particular concept with a different example. Thank you very much, guys. Have a great day.